I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show. And today we're going to be talking about where that 30-year fix prediction is and what is the prediction for 2023.
Yeah, we just came out of a really tough year for 2022. We're now moving into 2023, and here's your update.
All right. So remember, this is for informational purposes only. So everything we're talking about here is just giving you good information so that you can kind of digest it and make decisions. And of course, be sure to subscribe, comment, and like if you like what we're doing here. So a lot of analysts have been looking at the numbers. And for example, Bank Rate is showing at the end of 2023, they estimate about a 5.25% interest rate. Now, right now, for that 30-year fix, according to Freddie Mac, it's about 6.5%. Okay?
Yeah, so almost over a percent higher than where we think it's going to be at the end of the year.
So at the end of the year, maybe 5.25 according to Bank Rate. For example, Lending Tree has an article. They're saying 5.4% for that 30-year fixed. And there's other articles that were coming out about a month ago, also really kind of pointing towards the lower fives. So what that will look like is like this.
And also, I want to just take a quick minute. You know, Ed and I, we work in the mortgage business and talk about interest rates, and we have for years. Never have we watched the interest rate this close for this long. And it's because of these unprecedented times where we have, the Fed funds doing what they're doing. So it's really fascinating being able to sit here and try and predict. So when people say, what's your crystal ball say? I mean, we really are pulling a crystal ball out of the drawer. Is it a little foggy? It might be, but we think this is really good information.
That's right. So if you look at this chart right here, this is the 30-year fix according to Freddie Mac. And again, they're just an agency that buys the notes for conventional loans. So they're showing today's rate about 6.48 right over here. Okay. So now this green line is where this is just me hypothetically what that would look like if the Fed does not say anything or does not change any of their courses. Interest rates, the 30-year fix, will kind of go up and down, but ultimately, if those predictions are accurate, the rates would end right about that 5.3 mark at the end of 2023.
Yeah, and what I want to say to what Ed had said is the Feds right now are already talking about two different, 25, more likely 25 basis point movements. So when we say the Feds don't do anything, we mean they don't do anything beyond what they're already saying they're going to do. Because we already know that the market is assuming that they're going to be doing this stuff. So as long as the Feds are doing what we think they're going to do, that little squiggly line is where we think rates will go.
Yeah. And so what's the Fed thinking? Well, probably the better question is what do the best traders on earth think that they're going to be doing? And the Chicago Mercantile Exchange is basically buying these futures on the rates. And this is the probabilities that we see from the Chicago Mercantile Exchange. What we see now, this is kind of just hard to see here, but the Fed rate. Now we're talking about Fed rate, no longer the 30-year fix. The Fed rate currently is in this bracket of 4. It's about 4.25 to 4.5. Okay, it's in this bracket. When the next meeting for the Fed is February 1st. There's an estimated almost 80% chance they're going to raise it 0.25%.
Right. So when you have some of the smartest people in the world saying 80% chance they're going to raise it, by 0.25%, there's really good chances that that's going to happen.
Yeah. And on my line over here, this is a 20% chance that it goes up 0.5%.
Yeah. And how could it go up another 25 points on top of 25 points? Is if inflation or things come out in the employment numbers where the Feds are like, oh my gosh, things are not calming down. Exactly. We need to go from a 25 increase to a 50 basis point increase.
So in March, we see a 70% chance for another 0.25% rate. So we see a 0.25% rate for February, an 80% chance there, a 70% chance that there's a 0.25% rate in March. And then after March, there's basically a plateau. Most of the
a little bit more than half think we're going to stay there.
Yeah. And again, there could be a May or June that possibly we see another quarter on top, but we see this flattening. And then we see the momentum really moving down, the Fed moving down in rates starting potentially there in November.
And why would they move down? Because they're also having to counterbalance the economy. They don't want to push these rates and control inflation so much that it pushes the market too much into a recession.
Right.
So they're going to be very careful to make sure they start tapering or do what they call the pivot at the right time.
And this is what these movements in the Fed. So this is the Fed rate on this chart where you see is 2 increases from February to March, and then about 4 potential no moves.
Yeah, no moves. And this is what they call the holding pattern. And what they've said is they don't want to pivot right away. You don't go up, 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 and then down, 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 down. Because if you go down too quick, inflation can pop back up. So they need to make sure they hold it long enough to where what they did in the past sticks.
So we see the Fed, this is what we see the Fed doing right now, according to the traders. The probabilities are showing this is what the Fed will do. And we see that 30-year fix, according to a lot of analysts, maybe ending the 2023 year at about 5.3%. So again, if you like what we're doing here, be sure to subscribe, comment, and like. We'll be back.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.